why don't we start with Airbnb? This was just in general. I feel like every report I've ever looked at this quarter, I've thought like, well, here's the pros, here's the cons, there's some good parts, bad parts, that kind of thing. Airbnb's was just like an exceptional quarter all around. Probably the best quarter I've looked at this earnings season. Revenue grew at a healthy rate, even in spite of foreign exchange headwinds. They did $8.4 billion in revenue for the full year, and probably going to be on pace to do more than 10 billion this year. They generate tons of free cash flow, more than $3 billion in free cash flow, and they return a lot of that cash to shareholders. I think they bought back $1.5 billion this year.
That was nice to see. Yeah, they just ramped that up as well.
Yeah, it's really just kind of, I don't know, just impressive across the board.
Do you want me? I have some other key metrics from there that I think would be interesting to discuss.
Go for it.
Just for the audience, quick. Here's two. I don't want to throw out too many, but they had a gross booking value, which is basically all the dollars flowing through their platform, at $63.2 billion, up 35% year over year. And that is from fiscal year 2022. So this calendar year. And the nights and experiences booked were 394 million, up 31% year over year for the full year 2022. And then the fourth quarter slowed a bit, but 20% year over year growth for both of those. Any big takeaways from you, Ryan, outside of this is, they're doing well. And for the people like us who have been, watching Airbnb and focusing on the valuation, that, excuse, when we're focusing on the valuation, what I mean is we've liked the company. I think you'd agree with me there, but we're a little bit skeptical about the valuation. This is disappointing because we hope they've had, as the stock's gone up here, we've hoped that they would have like one bad report and the stock would tank and we kind of get a chance to buy, but that has not materialized yet.
No, and maybe the thing that stood out to me the most, and I saw a lot of people quote this, they said, compared to 2019, our headcount is down 5%, while our revenue is up 75%. I can't think of any other company where that's the situation, especially any other tech company, big tech company say it. So, I mean, I think I used to have some bad takes about Brian Chesky. I used to say, like, I don't know, something rubbed me the wrong way. I was wrong. This guy is incredible, and they do a remarkable job. And
they're still kind of facing headwinds in Asia too. That's still,
they pulled out of China this year.
Yeah, exactly. And the rest of Asia,
at least the domestic business. So like the hosting business, but obviously there's people in China that can book outside of China, that kind of thing. But
right.
My only concern would potentially be some sort of consumer pullback in travel, some sort of lack of affordability causing average daily rates to come down. But still, like, when I look at this thing 10 years out, just my gut reaction is I don't see how this is not a substantially bigger business. People, like, listing a room is becoming like a very normal part of culture in North America. Listing a room in your house, like, it's not that crazy, which, I don't know, blows my mind. It also gives me a little bit of optimism for Turo, which is kind of the premier ride sharing platform. I know it's slightly different, but it gives, like, I would have been skeptical in 2010.
Excuse me, you said ride sharing, just for the listeners, car sharing.
Right. Yeah. Car sharing. It's like, I would have been skeptical about sharing your own property or whatever in like 10 years ago, but this has really kind of given me some validation that it's doable and these marketplaces can really succeed. I don't know. Do you have any concerns here? Aside from, valuation has probably jumped a lot, but I mean, couldn't you see this doing, I don't know, $15 billion in revenue in 5 years and more than 5 or 6 billion in free cash flow?
Yes, I could. I think I said once that I wouldn't be surprised if it's doing, $200 billion in GBV, which is gross booking value. Yeah, and the big concern I had was ADRs, which is the average daily rate across their platform. And they've had a little bit of slowdown, but they've really grown through it. And it's only been quarter over quarter so far. So in Q4 2022, average daily rate was $153, and then in Q3 it was $156. I would be rarely interested to see what happens with that throughout the full year, because even if it stays flat and inflation is still high across the world, that's showing kind of a deterioration on a real basis of the ADR. But they do have a nice chart on Stratosphere that I'll pull up. What are your thoughts on that, Ryan?
Well,
on the ADR thing? Because it seems like if inflation is high, we shouldn't say it's going to go back to like the 2019 level, if you get what I mean.
yeah, and there was, I mean, even Chesky said kind of like you could expect ADRs to potentially come down. He said we anticipate slightly lower ADR than we had in Q1 of 2022 for this next upcoming quarter. And the other part he says here is for the remainder of the year, we expect ADR will face increasing downward pressure from mix shift. What?
I was going to say, sorry. I was going to pull up the screen and say I was wrong about the ADR being just last quarter. It's been basically a full year so far. If I'm sharing the screen here, we saw a huge bump during the pandemic. There is some seasonality, I guess, but now it's kind of trending back downwards a bit, and they're still growing that revenue.
Yeah, and I mean, the other thing that I really liked is they started to roll out this rentals business, or this like apartments business. So I know they only have like 175 apartments available right now, but you've experienced this where last year you were renting out your apartment, or you were renting out of an apartment, and you went to Mexico for 2 months. During that time, if your apartment had been Airbnb accepting or whatever, you could have rented it out, paid for your entire trip, and covered your rent by Airbnb-ing that thing. And I mean, that just seems like such a massive opportunity to go after. I think they're right in doing it. And it also has this, so it's good. More supply comes online, so there'll be more active listings potentially. Apartments feel incentivized to be Airbnb accepting because it will increase the likelihood that people want to rent from you because they know that they have better chance of affording it by being able to rent it out, that kind of thing. It's great for the actual renters themselves because they can afford it. It just seems like a win-win-win all across the board. And I don't know that they consistently find a way to like expand their addressable market and expand their active listings.
Yeah, and what's interesting is that they are facing, I mentioned headwinds from international. That's really just kind of a short-term thing as Asia, hopefully comes, fully recovered from COVID-19. But they are still facing multiple headwinds from just the regulatory stuff across all the cities with, who can list on Airbnb. And if they didn't have that, I think they would be growing even quicker. But I think on the flip side, the bullish part of that would be over time, you should hopefully, just because consumers want this, see steady demand over and over, or steady supply unlock from these regulatory changes where, like that apartment thing where I think it was 175 apartments across the country. So across the United States. So not that many, but you can see how that could grow over time. And yeah, I mean, it's just a great business. As we sit here today to wrap up this segment, at a market cap of $74 billion.
That's what I was gonna say, yeah.
EV, according to Stratosphere here, $68.6 billion. So let's just say $69 billion.
69 divided by 3.5 billion in free capital, right? Is what, 3.4?
Yeah.
20 times trailing.
I think, yeah.
There's no way that's right. Hold on.
I think one their free cash flow can get changed because of the bookings, how the people will pay the money up front. So I'm gonna look
they've got like the working capital benefit.
Yeah, so let me look at operating income.
Yeah, and then they got that little stock-based comp, a decent amount of stock-based comp. Trailing 12 months operating income is, I think, 1.6 billion.
Yeah, possibly.
No, that's slightly
No,
behind
that's not.
because
Yeah,
it's a
it's not
quarter behind.
updated. Yeah, let me. I can get it. I can get it. Full year.
Yeah.
I don't like to use their adjusted EBITDA because they're heavy SBC.
Okay, before you look at it, before you do the math,
Okay.
what multiple would you say this is going to the top of the watch list?
Where it gets interesting, quote unquote.
Yeah.
I say. I think this is one where about 25 times I'd get interested. And it really got to there because typically we kind of look for, unless it's something that's super high quality where we think they can grow forever, which is very, very few companies, or not forever, but grow at a high rate for many years. We like stuff that at least, if it's we think it has a competitive advantage, maybe around 20 times earnings or less. But for this one, I think this is kind of one of the few where I think it can grow a lot for a long time. I have it up here, 1.8 billion income from operations in 2022. So what would let's just say it's 2 billion times 2.5 would be a market cap of about $45 billion. I think I'm doing that math right. So I think in between,
the EV to operating income is probably like a little north of 30 right now.
Yeah, and what's unfortunate is that it got into the 25 times range in December for a quick period. But
you know what? During that time, we said this is a perfect example of, unless you really know the business well, price drives narrative. We were like, oh well, what about a travel pullback? What about
the Airbnb
ADRs compressing?
The supply stuff that people have been talking about, the oversupply, the ADR collapse that everyone.
Let me pose this. We talked about how real estate, we're going to talk about Zillow here in a second. Real estate, we think, is in for a difficult period with potentially prices coming down. What if Airbnb is a beneficiary of that? What if more people need to rent out a room to afford their homes?
Well, yeah, some people might be stuck in those low, and it's not like a bad thing because they got a nice deal on their mortgages, but they might be stuck in that 3% mortgage that they've refinanced. I do not know the percentage of the country that's on that, but if they have that, they could, if they're moving somewhere, they might be like, oh, okay, instead of getting a condo somewhere, we could Airbnb a place for 3 months and then come and then rent out our own place kind of deal instead of fully selling, because they don't want to take that loss if housing prices are either there's no demand because housing prices are so high, or on the flip side, housing prices are falling. We got a comment here. I haven't read it yet.